Hi. Let's learn about 501(c)(3) organizations. Section 501(3) is a portion of the U.S. Internal Revenue Code, IRC, and a specific tax category for nonprofit organizations. Organizations that meet Section 501(c)(3) requirements are exempt from federal income tax. The Internal Revenue Service, IRS, recognizes more than 30 types of nonprofit organizations, but only those that qualify for 501(c)(3) status can say that donations made to them are tax-deductible. Most of the organizations that may be eligible for 501(c)(3) designation fall into one of three categories: charitable organizations, churches and religious organizations, and private foundations. The rules outlined in Section 501(c)(3) are regulated by the U.S. Treasury through the IRS. A group must operate exclusively for one of certain purposes to be considered a charitable organization by the IRS, such as charitable, religious, educational, scientific, literary, testing for public safety, fostering national or international amateur sports competition, or preventing cruelty to children or animals. An organization is also forbidden from using its activities to influence legislation in a substantial way, including participating in any campaign activities to support or deny any particular political candidate. People employed by the organization must be paid reasonable compensation, based on the fair market value that the job function requires. An organization is also required to remain true to its founding purpose to stay tax-exempt under Section 501(3). An organization must not be serving any private interests to be tax-exempt under Section 501(3). These include the interests of the creator, the creator's family, shareholders of the organization, other designated individuals, or other persons controlled by private interests. None of the net earnings of the organization can be used to benefit any private shareholder or individual. All earnings must be used solely for the advancement of its charitable cause. Organizations that meet the requirements of Section 501(c)(3) are exempt from federal income tax, but they're required to withhold federal income tax from their employees' paychecks as well as withhold and pay Social Security and Medicare taxes. Organizations that meet the 501(3) tax category requirements can be classified into two categories: public charities and private foundations. A public charity is a non-profit organization that receives a substantial portion of its income or revenue from the general public or the government, while a private foundation obtains most of its income from a small group of donors. There are fewer tax deductions available to individuals who donate to private foundations compared to public charities. The 501(3) status offers a myriad of benefits to the designated organizations and the people they serve. These organizations are exempt from paying federal income and unemployment taxes, and patrons who donate to them are allowed to claim a tax deduction for their contributions. However, because the organization serves the public, it must operate with full transparency. Its finances, including salaries, are available to members of the public and subject to their review. The American Red Cross, established in 1881 and congressionally chartered in 1900, is one of the United States' oldest nonprofit organizations. Its mission statement says that the Red Cross prevents and alleviates human suffering in the face of emergencies by mobilizing the power of volunteers and the generosity of donors. Since its inception, its goal has been to serve members of the armed forces and provide aid during disasters. The Red Cross is located in 191 countries and operates the largest network of volunteers in the world. It is a 501(3) organization segmented into three divisions: the National Red Cross and Red Crescent Societies, the International Federation of Red Cross and Red Crescent Societies, and the International Committee of the Red Cross. You must define the type of organization and its purpose or mission. Ensure that a name isn't taken before selecting one. Secure the name by registering it with your state if it's available. Otherwise, secure the name when filing the Articles of Incorporation. The Articles of Incorporation must be filed with the state in which it will be organized and according to the state's rules for nonprofit organizations. A determination letter is sent after applying for the 501(3) exemption. The IRS will only say that applications are processed as quickly as possible and are processed in the order received by the IRS. The organization must be formed as a trust, a corporation, or an association to qualify for the 501(3) status, according to the IRS. A 501(3) organization is a non-profit organization established exclusively for one of several charitable purposes, while a 501(c)(4) is a social welfare organization that promotes the common good and general welfare of the people in the community. 501(c)(3) organizations are mostly prohibited from engaging in lobbying, while 501(c)(4) organizations may engage in lobbying activities as long as it's not their primary activity. 501(3) organizations are nonprofit groups with a dedicated mission. They receive favorable tax treatment, such as avoiding federal income and unemployment taxes, as long as they operate to support their mission. Here are 5 key takeaways. 1. Section 501(c)(3) is a portion of the U.S. Internal Revenue Code, IRC, and a specific tax category for nonprofit organizations. 2. Organizations that meet the requirements of Section 501(c)(3) are exempt from federal income tax. 3. The IRS recognizes more than 30 types of nonprofit organizations, but only organizations that qualify for 501(c)(3) status can say that donations made to them are tax deductible. 4. 501(c)(3) organizations must pay their employees fair market value wages. 5. The nonprofit organization must not deviate from its purpose or mission to receive its favorable tax treatment. Hope this would help. Thanks for watching.